Moderna Institutional Equity Research Report, a post-pandemic collapse, a $950 million settlement, and a 177% one-day cancer data surge.
Section 1. Executive Summary. Moderna, Inc. is a Cambridge, Massachusetts-based biotechnology company built around a single core idea that messenger RNA, mRNA, can function as a kind of biological software, instructing the body's own cells to produce proteins that prevent or treat disease. Founded in 2010 and originally named Moderna Therapeutics, the company operated for a decade as a well-funded but largely unproven platform bet until the COVID-19 pandemic gave it the opportunity to prove the technology worked at global scale. Its Spikevax vaccine became one of the first COVID-19 vaccines authorized for emergency use in December 2020, catapulting Moderna from a research-stage biotech into a company that generated tens of billions of dollars in vaccine revenue within a matter of quarters. In plain terms, Moderna is now navigating the hardest part of the pandemic-era success story: what happens after the emergency ends. Full-year revenue fell from a pandemic-inflated $6.8 billion in 2023 to $3.2 billion in 2024 and $1.94 billion in 2025, a 40% decline in that final year alone, as COVID-19 vaccination normalized to a much smaller seasonal at-risk population market, resembling annual flu shots rather than a global emergency campaign.
The company is now trying to replace that lost revenue with a broader portfolio: 3 additional approved products, mRESVIA, mNESPIKE, and mFlusiva, and an ambitious oncology and rare disease pipeline funded by the roughly $6.9 billion of cash and investments still remaining on its balance sheet. That oncology bet just received its strongest validation to date. On August 19, 2026, Moderna and partner Merck announced that the Phase 3 INTerpath-001 trial of intismeran autogene, Moderna's individualized neoantigen therapy, plus Merck's Keytruda, met both its primary endpoint, recurrence-free survival, and a key secondary endpoint, distant metastasis-free survival, in resected stage 2B to 4 melanoma, the first ever positive Phase 3 readout for an individualized mRNA cancer therapy anywhere in the industry. The market reaction was extraordinary and volatile. mRNA shares surged as much as 177% intraday on the announcement, their best single day ever, inflicting an estimated $5.5 billion in one-day paper losses on short sellers, fell roughly 20% the following session, and have since whipsawed in a $131 to $159 range, trading around $145 to $146 as of this report's date, a more than 2.5x increase from pre-announcement levels, though full trial data has not yet been published, and the companies say they plan to file for regulatory approval within months. The companies plan to present full data at an upcoming medical meeting and engage regulators on a filing submission. Q2 2026 results, reported July 31, 2026, showed a business in the middle of this transition. Revenue of $145 million, up a modest 2% year-over-year, but exceeding the company's own guidance range, alongside a $782 million net loss that nonetheless improved 5% from the prior year on continued cost discipline. Days later, on August 5, 2026, the FDA approved mFlusiva for adults 50 and older, the first mRNA-based seasonal flu vaccine ever licensed in the U.S., and Moderna's 4th approved product, capping a regulatory turnaround after a refusal to file episode earlier in 2026.
Key facts at a glance. Core technology, mRNA platform, instructs cells to produce disease-fighting or disease-preventing proteins. Approved products: Spikevax, mRESVIA, mNESPIKE, mFlusiva, flu, approved August 5, 2026, for adults 50+. Fiscal year 2025 revenue, $1.94 billion,
down 40% from $3.2 billion in fiscal year 2024, itself down from $6.8 billion in fiscal year 2023. Q2 2026 revenue, $145 million, plus 2% year-over-year, above guidance. Q2 2026 net loss, $782 million, improved 5% year-over-year. Loss per share, $1.97, beat $2.07 consensus. Cash and investments, $6.9 billion as of June 30, 2026. Company targets 2028 cash break-even. Key recent catalyst, mRNA flu vaccine, approved August 5, 2026 for adults 50+, first mRNA flu vaccine licensed in the U.S. Section 2. Investment thesis. The bull case for Moderna rests on the idea that the company's pandemic windfall, however temporary, bought it something durable, a validated mRNA manufacturing and development platform, a $6.9 billion cash cushion, and a genuinely differentiated pipeline spanning respiratory vaccines, individualized cancer therapy, and rare genetic disease treatments. CEO Stéphane Bandel has laid out a specific plan: build a large seasonal vaccine franchise for at-risk populations over the next 3 years and reinvest that cash flow into oncology and rare disease programs, with a public target of reaching cash break-even by 2028. Near term, the flu vaccines August 5, 2026 FDA approval and the August 19, 2026 positive Phase 3 INTerpath-001 melanoma result, the first ever positive Phase 3 readout for an individualized mRNA cancer therapy, both offer concrete, dated evidence that the diversification strategy is producing real clinical and regulatory results, not just. The bear case is that Moderna is racing against its own cash burn to prove out an entirely new commercial portfolio, and the early results are genuinely mixed. Revenue fell 40% from 2024 to 2025 alone, and more than 70% from its 2023 peak. Quarterly net losses still exceed $750 million, and the company's norovirus vaccine, one of its most closely watched respiratory pipeline assets, failed to meet the statistical criteria for early success at its Phase 3 interim analysis in Q2 2026, requiring additional patient enrollment and delaying a key readout. A $950 million litigation settlement paid in July 2026 will materially reduce Moderna's cash position in the very next quarter, and full-year 2026 revenue guidance of up to 10% growth still explicitly assumes further potential declines in U.S. COVID vaccination rates, meaning even the company's own base case anticipates continued softness in its largest existing product line. Thesis in one sentence: Moderna has the cash, the platform, and a credible 3-year plan to rebuild around seasonal vaccines, oncology, and rare disease, but it is running a genuine race against its own cash burn, and near-term pipeline results, strong on flu, disappointing on norovirus, show that race is still very much undecided. Section 3. Company Overview. Legal Entity: Moderna Inc., formerly Moderna RNA Therapeutics, 2010 to 2018. Headquarters: Cambridge, Massachusetts. Exchange/ticker: NASDAQ, mRNA. S&P 500 component. Founded September 10, 2010. Founders: Derek Rossi, Timothy A. Springer, Robert S. Langer, Kenneth R. Chen, and Noubar Afeyan. Flagship pioneering. Founding CEO: Stéphane Bancel, joined 2011. Chairman: Noubar Afeyan. President: Stephen Hogue. CFO: Jamie/James Mock. Employees: approximately 4,700 to 4,800 as of December 31, 2025. Corporate history: Moderna's name is a portmanteau of modified and RNA, reflecting a founding insight from co-founder Derek Rossi.
modifying synthetic RNA could allow it into human cells without triggering a dangerous immune response. Backed by flagship pioneering, the company operated under a platform-first philosophy for years, completing what was then the largest ever biotech IPO in December 2018, before COVID-19 transformed it into a global vaccine manufacturer almost overnight.
Corporate milestones. Date: milestone, September 2010. Company founded in Cambridge, Massachusetts as mRNA Therapeutics. December 2018. Completes IPO, at the time the largest ever biotech IPO. December 2020. Spikevax, mRNA 1273, authorized for emergency use as one of the first COVID-19 vaccines. January 2022. FDA grants full approval, BLA, to Spikevax for adults 18 and older. 2023. Completes first ever acquisition, Ori Genomics, $85 million, adding cell-free DNA synthesis capability. 2024. mRESVIA approved, first mRNA RSV vaccine roughly a year after GSK and Pfizer's RSV vaccines. May 2025. mNEXSpike, Moderna's second COVID-19 vaccine approved in the U.S. July 2026. Pays $950 million to resolve a litigation settlement materially affecting Q3 2026 cash balance. July 31, 2026. Reports Q2 2026 results. August 5, 2026. FDA approves mFlusiva for adults 50 and older, first mRNA flu vaccine licensed in the U.S., Moderna's fourth approved product. August 19, 2026. Moderna-Merck announced Phase 3 INTerpath-001 met RFS and DMFS endpoints in melanoma, first positive Phase 3 result for an individualized mRNA cancer therapy.
Section 4. Business Model. Moderna operates as a platform-based biotechnology company. Rather than developing a series of unrelated, one-off drugs the way traditional pharmaceutical companies often do, it uses a single core technology, messenger RNA, as what management has described as a biological operating system that can, in principle, be reprogrammed to instruct cells to produce almost any protein needed to prevent or fight a given disease. This platform approach lets Moderna apply the same underlying manufacturing and development infrastructure across vaccines, cancer therapies, and treatments for rare genetic disorders, rather than building entirely separate capabilities for each new product. Commercially, Moderna currently earns revenue from product sales of its 4 approved vaccines: Spikevax, RESVIA, mNEXSpike, and now mFluVisa, supplemented by long-term strategic government partnerships, including deals in the United Kingdom, Canada, and Australia, that provide stand-ready manufacturing and collaboration revenue independent of any single vaccination season's volume. The company is simultaneously investing its remaining cash reserves into new manufacturing capacity, including new fill-finish capabilities and 3 new international sites, and a broad pipeline spanning additional respiratory vaccines, individualized cancer immunotherapy, and rare disease treatments, betting that this diversification will eventually replace the revenue lost as COVID-19 vaccination shifted from a global emergency campaign to a smaller, seasonal, at-risk population market. How to think about it? Think of Moderna's current strategy as deliberately using its remaining pandemic-era cash pile as a bridge. Management is explicitly trying to fund a multi-year transition from COVID vaccine company to diversified mRNA medicines company before that cash runs out, with 2028 cash break-even as the specific finish line they've set for themselves. Section 5. Products and Services. Product/pipeline. Asset. Description. Spikevax, Moderna's original COVID-19 vaccine, one of the first authorized globally, December 2020, and fully FDA approved since January 2022, remains a core if declining revenue contributor. Resvia, RSV, respiratory syncytial virus vaccine, approved in the US, Europe, Canada, and Qatar since 2024, the first ever approved mRNA RSV vaccine, though it launched roughly a year behind competing RSV vaccines from GSK and Pfizer. mNX Spike, Moderna's second-generation COVID-19 vaccine, approved in the U.S. in May 2025, captured approximately 24% of the U.S. retail COVID vaccine market in its most recent reported period. Mflusiva, mRNA 1010, seasonal influenza vaccine, approved by the FDA August 5, 2026 for adults 50 and older, full approval for ages 50 to 64, accelerated approval for 65+ pending a post-marketing confirmatory study, the first mRNA-based flu vaccine licensed in the U.S., expected available for the 2026-2027 season. mRNA 1403 norovirus vaccine, Phase 3 candidate that did not meet statistical criteria for early success at its most recent interim analysis, requiring an additional patient cohort and delaying its readout timeline. Intismeran autogene, INT, individualized neoantigen therapy, an individualized cancer immunotherapy for adjuvant melanoma developed with Merck. On August 19, 2026, the Phase 3 Interpath 001 trial, INT plus Keytruda, met both its primary endpoint, recurrence-free survival, and a key secondary endpoint, distant metastasis-free survival, the first positive Phase 3 readout ever for an individualized mRNA cancer therapy, building on 5-year Phase 2 durability data presented at ASCO 2026. The companies plan to engage regulators on a filing submission. mRNA 4194/mRNA 4200/mRNA 4203. Additional oncology programs. Dosing has commenced in 2 new cancer antigen programs, and Phase 1 dosing continues for a combination approach with Immutus's Anzu cell therapy. Rare disease programs, PA, MA. Propionic acidemia registrational study is fully enrolled, with data expected in 2026. The MMA program's pivotal trial decision has been deferred pending PA readout. How to think about it. The contrast between the flu vaccine's unanimous advisory committee endorsement and the norovirus vaccine's disappointing interim analysis, both disclosed in the same quarter, is a useful reminder that pipeline diversification doesn't mean every program succeeds on schedule. Investors should expect this kind of mixed news flow to continue as Moderna advances a genuinely broad, multi-program pipeline.
Section 6. Industry Overview. The COVID-19 vaccine market has undergone a structural transformation industry-wide since the pandemic's acute phase ended, shifting from a mass global emergency vaccination campaign to a smaller, seasonal market resembling the existing flu vaccine business, one concentrated among older adults and other at-risk populations who choose annual updated boosters. This shift has affected every major COVID vaccine maker, not just Moderna, though its effect on Moderna has been particularly pronounced given how disproportionately the company's early revenue depended on COVID-19 vaccine sales. At the same time, the broader mRNA technology platform, validated at unprecedented speed and scale during the pandemic, continues attracting investment and clinical development interest across new categories, including individualized cancer immunotherapy, rare genetic disease treatment, and combination respiratory vaccines, such as flu-COVID combination shots. This creates a genuinely large, if still largely unproven at commercial scale, market opportunity for companies like Moderna that already possess mature mRNA manufacturing and clinical development infrastructure from the pandemic era.
Section 7. Market Opportunity. Moderna's most immediate opportunity is establishing itself in the seasonal respiratory vaccine market beyond COVID-19 alone. The August 5, 2026 approval of mFLUSIVA lets the company offer a broader respiratory vaccine portfolio, potentially including future flu-COVID combination shots to the same at-risk population base it already reaches through SpikeVax and mNEX-Spike, improving the economics of its existing commercial infrastructure. Management explicitly framed the next 3 years around building a large seasonal vaccine franchise for at-risk populations as the funding engine for its longer-term oncology and rare disease ambitions. Beyond respiratory vaccines, Moderna's oncology pipeline, anchored by its individualized neoantigen therapy for melanoma developed with Merck, represents a genuinely differentiated, personalized medicine opportunity distinct from traditional one-size-fits-all cancer treatments. The company's new manufacturing facility in Marlborough, Massachusetts, was purpose-built specifically for this individualized therapy, reflecting real capital commitment to this growth vector, while new international manufacturing sites in Canada, the UK, and Australia support both revenue diversification and local market access. How to think about the opportunity. The mFLUSIVA approval is worth watching closely beyond its own commercial value, as an early proof point of how efficiently Moderna can now bring new products through FDA review. After a genuinely rocky path, the application was initially subject to a rare refusal to file letter in February 2026 before being revived and ultimately approved, a capability test relevant to the rest of the company's pipeline. Section 8. Competitive Landscape. Competitor, Listing, Positioning. Pfizer/BioNTX, NYSE, PFE/NASDAQ, BNTX. Moderna's primary COVID-19 competitor, Comirnaty, with substantially greater overall scale and diversification through Pfizer's broader pharmaceutical scale. Novavax, NASDAQ, NVA, offers a protein-based non-mRNA COVID-19 vaccine alternative, appealing to some patients seeking non-mRNA options. GSK, NYSE, GSK, along with Pfizer, brought RSV vaccines, Arexvia, to market roughly a year ahead of Moderna's mRESVIA in May 2023. Established flu vaccine makers, Various. Now that mFLUSIVA is approved, Moderna's mRNA flu vaccine competes directly against decades-established seasonal influenza vaccine manufacturers with existing physician and pharmacy distribution relationships. Merck, NYSE, MRK, both a competitor in broader oncology and a direct collaboration partner on Moderna's individualized neoantigen therapy, Inturzamoran, program. Where Moderna stands. Moderna retains meaningful competitive advantages from its pandemic-era experience, mature, tested mRNA manufacturing infrastructure, direct clinical and regulatory relationships built through multiple rapid vaccine approvals, and a genuinely broad pipeline spanning multiple therapeutic categories rather than dependence on a single product. However, the company remains smaller and less diversified than giants like Pfizer, and its RSV vaccine's roughly 1 year later market entry versus GSK and Pfizer illustrates that Moderna does not always hold a first-mover advantage even within its own core mRNA specialty.
Section 9. Management Team. Stéphane Bancel, Chief Executive Officer, since 2011. Joined Moderna as founding CEO in 2011, recruited by flagship Pioneering's Noubar Afeyan, and has led the company through its decade-long platform-first development phase, its 2018 IPO, and its rapid pandemic-era scale-up. On the Q2 2026 earnings call, Bancel reiterated the company's 3-year strategic framework. Over the next 3 years, we expect to build a large seasonal vaccine franchise for at-risk populations and invest the cash generated into oncology and rare disease therapeutics. We plan to deliver up to 10% revenue growth in 2026 while continuing to reduce our R&D investments and diversify further into oncology. James Mock, Chief Financial Officer, led the Q2 2026 financial results presentation, detailing the quarter's revenue performance, cost discipline measures, and updated full-year financial framework, including reduced cost of sales and R&D spending guidance for 2026.
Section 10. Financial Performance. FY 2025. $1.94 billion. Operating income. Information not specified in this source set. Information not specified in this source set. Negative $3.1 billion. Net income. Negative $4.7 billion. Negative $3.6 billion. Negative $2.8 billion. Total assets. Information not specified in this source set. Information not specified in this source set. $12.3 billion. Total equity. Information not specified in this source set. Information not specified in this source set. $8.65 billion. In plain terms, Moderna's revenue has now declined for 3 consecutive years since its 2021-2022 pandemic peak, from $6.8 billion in 2023 to $3.2 billion in 2024, down 53%, to $1.94 billion in 2025, down a further 40%, as COVID-19 vaccination normalized to a much smaller seasonal market. The company remains deeply unprofitable on both operating and net basis, reflecting continued heavy investment in its broad pipeline, even as commercial revenue has sharply fallen. A deliberate, disclosed strategic choice rather than an unexpected shortfall, given management's explicit 2028 cash break-even target. Quarterly trend and balance sheet. Cash and investments stood at $6.9 billion as of June 30, 2026, down from $7.5 billion at the end of Q1 2026. A $600 million sequential decline, reflecting continued operating cash burn. Importantly, this figure does not yet reflect the $950 million litigation settlement Moderna paid in July 2026, which will materially reduce the company's cash position when reported in Q3 2026 results. Management has guided full-year 2026 year-end cash and investments to a range of $4.7 to $5.2 billion, implying continued substantial cash consumption through the remainder of the year, even after accounting for the settlement payment. Section 11. Detailed Analysis Latest Quarterly Earnings, Q2 2026. Revenue. Total revenue was $145 million, up approximately 2% from $142 million a year earlier, and above the top end of the company's own guidance range for the quarter. Management noted that lower COVID-19 vaccine sales in the US and South America were offset by deliveries under Moderna's long-term UK government partnership and higher stand-ready manufacturing and collaboration revenue, illustrating the company's early progress diversifying revenue sources beyond direct COVID vaccine sales. Gross margin. Cost of sales was $93 million, down 22% year-over-year, driven primarily by lower unutilized manufacturing capacity costs, a sign that Moderna's manufacturing footprint is becoming better matched to its now smaller commercial volume, reducing the drag from idle production capacity built for the pandemic-era demand level. Operating income. R&D expenses were $651 million, down 7% year-over-year, while S&G&A expenses were $216 million, down 6% year-over-year, which management attributed to continued cost discipline. Standalone GAAP operating income/loss, information not publicly available as a distinct reconciled figure in the specific sources reviewed for this report,
Readers should consult the complete Form 10-Q on SEC EDGAR for full detail. Net income. Net loss was $782 million, an improvement of $43 million or 5% compared to the prior year quarter, driven by the combination of modest revenue growth and the cost reductions across cost of sales, R&D, and S&G&A discussed above. EPS. Loss per share was $1.97 compared to $2.13 in the same quarter last year, and better than the $2.07 per share loss analysts had expected, a 4.83% beat versus consensus. Cash flow. Standalone Q2 2026 operating cash flow figures, information not publicly available as a distinct reconciled line item in the specific sources reviewed for this report. The $600 million sequential decline in total cash and investments from $7.5 billion to $6.9 billion provides the clearest available proxy for the quarter's net cash usage. Balance sheet. Cash and investments were $6.9 billion as of June 30, 2026. As discussed in Section 10, this figure predates the $950 million litigation settlement payment made in July 2026, which will be reflected in the company's Q3 2026 balance sheet instead.
Guidance. Management reiterated full-year 2026 revenue guidance of up to 10% growth, with an expected roughly 50-50 split between U.S. and international revenue, and third-quarter revenue expected to represent approximately 55% of second-half revenue, reflecting the seasonal concentration of vaccine sales ahead of the fall-winter respiratory season. The company lowered its full-year cost of sales guidance by $0.1 billion to $1.7 billion and its R&D guidance by $0.1 billion to $2.9 billion, resulting
in a tighter overall cash cost target of approximately $4 billion for the year. Full-year 2026 year-end cash and investments are now projected at $4.7 to $5.2 billion. Management commentary. CFO Jamie Mock stated, "As you know, the second quarter is always light for seasonal vaccines. We generated revenue of $0.1 billion, which exceeded the top of our range. Our focus on financial discipline continued. We reduced cash cost by 10% in Q2 compared to the second quarter of 2025. He added, "We reported a net loss of $0.8 billion. We ended the quarter with $6.9 billion in cash and investments, maintaining a strong balance sheet while continuing to invest in our pipeline. Overall, I am pleased with our continued execution across the business." CEO Stéphane Bancel reiterated the company's medium-term strategic framework centered on building a seasonal vaccine franchise while diversifying into oncology and rare disease. Key changes versus previous quarter. Cash and investments declined by $600 million sequentially from $7.5 billion to $6.9 billion, ahead of the much larger $950 million litigation settlement payment made in July. Full-year cost of sales and R&D guidance were both trimmed by $0.1 billion each, tightening the company's overall cash cost target to approximately $4 billion. The flu vaccine candidate, mRNA 1010, received a unanimous positive VRBPAC recommendation during the quarter and was subsequently approved by the FDA as MFULVISAV on August 5, 2026, shortly after quarter end. The norovirus vaccine's Phase 3 interim analysis did not meet statistical criteria for early success, introducing a new pipeline setback in timeline delay versus the prior quarter's expectations. The company announced a new chief commercial officer during the quarter. Separately, on July 8, 2026, just after quarter end, Moderna appointed former Biogen CFO Michael McDonald to its board of directors and audit committee.
Section 12. Growth Drivers. Plus, mFluziva Launch Execution.
following its August 5, 2026 approval, successfully launching mFluziva ahead of the 2026-2027 respiratory season and driving strong uptake among adults 50+, would add a genuinely new large seasonal respiratory product to Moderna's commercial portfolio. Plus, continued mNEXSpike market share gains. Capturing approximately 24% of the U.S. retail COVID vaccine market in its most recent reported period shows Moderna's newer COVID vaccine formulation is successfully competing for the shrinking but still meaningful seasonal COVID vaccination market. Plus, positive Phase 3 oncology data. The August 19, 2026 announcement that INTerpath-001 met both its primary and key secondary endpoints in melanoma, the first positive Phase 3 result ever for an individualized mRNA cancer therapy, is Moderna's most significant pipeline validation to date and its clearest long-term growth opportunity beyond respiratory vaccines. Plus, international manufacturing diversification. New manufacturing sites in Laval, Canada, Harwell, UK, and Clayton, Australia, support local market access and revenue diversification, with margins management expects to be consistent with U.S. operations. Plus, continued cost discipline. Reductions across cost of sales -22% year-over-year, R&D -7% year-over-year, and SG&A -6% year-over-year in Q2 2026 demonstrate genuine progress toward the company's 2028 cash break-even target, extending the runway available to fund pipeline development.
Section 13. Key risks. 1. Continued steep revenue decline from pandemic peak. Full-year revenue fell 40% from 2024 to 2025, and more than 70% from its 2023 peak, and the company's own 2026 guidance explicitly factors in potential further declines in U.S. COVID vaccination rates, meaning the base case itself assumes continued softness in Moderna's largest existing product line. 2. Substantial ongoing cash burn. Despite meaningful cost reductions, Moderna posted a $782 million net loss in a single quarter and used $600 million of cash sequentially even before the $950 million litigation settlement paid in July 2026. The company's 2028 cash break-even target requires sustained execution on both cost discipline and new product revenue. 3. Pipeline setbacks remain a real possibility. The norovirus vaccine's failure to meet statistical criteria for early success at its Phase 3 interim analysis in the same quarter as the flu vaccine's positive news is a direct reminder that not every pipeline program will succeed on its original timeline or at all. 4. $950 million litigation settlement impact. This one-time cash outflow, paid in July 2026, will materially reduce Moderna's cash position in Q3 2026 and represents a meaningful, non-recurring drain on the company's remaining financial runway. 5. Intense competition, including with later entrants with head starts. Moderna's RSV vaccine launched roughly a year behind competing products from GSK and Pfizer, illustrating that the company does not always hold first-mover advantage even in categories closely related to its core mRNA expertise. Larger competitors like Pfizer retain substantially greater overall scale and commercial infrastructure. A regulatory and clinical trial uncertainty. Multiple pipeline programs, including the rare disease MMA program, remain contingent on the outcomes of other ongoing trials. In MMA's case, the PA program's 2026 readout, meaning delays or disappointing results in one program can cascade into delayed decision-making across others. Extreme post-announcement stock volatility. Moderna shares surged as much as 177% intraday on the August 19, 2026 Interpath 001 news, fell roughly 20% the next session, and have continued whipsawing in a $131 to $159 range since, a level of volatility that reflects a stock price built substantially on interim, top-line-only trial results, rather than full published data or a completed regulatory filing. The 23-analyst average price target of roughly $91 sits well below the current trading price, and a sell rating from J.P. Morgan, even after the spike, underscores genuine, unresolved disagreement about whether the current valuation is justified. 4. Adverse federal policy environment for mRNA technology. U.S. Health and Human Services Secretary Robert F. Kennedy Jr., a vocal mRNA vaccine skeptic, has criticized mRNA COVID-19 vaccines and overseen the cancellation of a $590 million mRNA pandemic influenza vaccine contract with Moderna in 2025, followed by an announcement that HHS would no longer fund mRNA research through BARDA, canceling 22 separate contracts. This hostile federal policy backdrop toward the company's core technology platform represents an ongoing risk to future government funding, contracts, and broader public confidence in mRNA medicines, independent of the technology's clinical merits. 5. Execution risk on a genuinely broad, multi-category pipeline. Simultaneously advancing respiratory vaccines, individualized oncology therapy, and rare disease programs across multiple new international manufacturing sites requires substantial organizational focus and capital discipline, with real risk of execution missteps across such a wide program portfolio.
Section 14. Valuation. Metric. Value. Share price pre-INTR-PATH-001, August 18, 2026, $50 to $56. Intraday peak reaction, August 19, 2026. Up as high as 177%, the stock's best single day ever. Recent trading range as of this report, $131 to $159, whipsawing since the announcement. 52-week range now $22.28 to $176.66. Approximate current price, $145 to $146. Average analyst rating / 12-month price target. Hold, 23 analysts, $91, implying significant downside from the current price. Selected updated price targets post-August 19th. Goldman Sachs, $120 from $67. Morgan Stanley, $89 from $39. J.P. Morgan maintained. Short seller mark-to-market losses, single day, August 19th. $4.8 to $5.5 billion. Next earnings report, estimated, November 4th to 5th, 2026.
Moderna's valuation has become genuinely difficult to anchor since August 19, 2026, when shares surged as much as 177% intraday on the Interpath 001 news, the stock's best single trading day on record, inflicting an estimated $4.8 to $5.5 billion of one-day mark-to-market losses on short sellers, before falling roughly 20% the next session and continuing to whipsaw in a wide $131 to $159 range through this report state.
At a recent price around $145 to $146, the stock trades at more than 2.5 times its pre-announcement level, even though only interim top-line trial results have been disclosed. Full data has not yet been presented, and a regulatory filing is not expected for months. This gap between share price and disclosed data is itself a notable risk factor, echoed in the sell-side response. While Goldman Sachs and Morgan Stanley both raised price targets sharply to $120 and $89 respectively, JP Morgan maintained a sell rating even after the spike, and the broader 23 analyst average 12-month price target of roughly $91 sits well below the current trading price, meaning Wall Street's consensus, on balance, has not fully embraced the post-spike valuation. Beyond the oncology-driven re-rating, balance sheet strength remains part of the underlying investment case. $6.9 billion of cash and investments as of June 30, 2026, before the $950 million settlement payment made in July further reduced that cushion, relative to the company's stated path to 2028 cash break-even. Investors should treat the current price of the share as reflecting a high degree of speculative optimism about intismeran's eventual approval and commercial success, rather than a valuation grounded in current revenue or profitability, which remain deeply negative.
Section 15. Upcoming catalysts. Catalyst. Expected timing. Why it matters. mFlusiva commercial launch and early uptake. Ahead of the 2026-2027 respiratory season. Following its August 5, 2026 approval, early sell-through and physician/pharmacy adoption data will be the first real test of commercial demand for the first mRNA-based flu vaccine. Interpath-001 full data presentation and regulatory filing. Information not publicly available, company's plan. Following the August 19, 2026 positive top-line Phase 3 result, full data disclosure and an eventual filing submission are the next steps towards a potential first approval for Moderna's oncology franchise. Post-marketing confirmatory study design/start. Information not publicly available. Required to convert mFlusiva's accelerated approval in older adults into full approval, a key regulatory follow-through item. Q3 2026 earnings report, November 5, 2026, estimated, will show the fall-winter vaccination season's early commercial impact and reflect the $950 million litigation settlement payment. Propionic acidemia PA registrational study data, 2026, fully enrolled rare disease study. Results will also inform the timeline for the related MMA program's pivotal trial decision. Norovirus vaccine additional cohort enrollment and revised readout. Information not publicly available, delayed following the Q2 2026 interim analysis. Will determine whether this respiratory pipeline asset remains viable on a revised timeline. Continued oncology data readouts, intrastimizarine, mRNA 4194/4200/4203, ongoing. Additional efficacy and durability data would further validate Moderna's individualized cancer therapy platform. New international manufacturing site ramp-up through 2027. Progress at the Laval, Harwell, and Clayton facilities will show how quickly international revenue diversification and margin improvement materialize.
Section 16. Long-term outlook. Moderna's long-term outlook depends on whether management's explicit 3-year plan, build a large seasonal respiratory vaccine franchise, then reinvest that cash flow into oncology and rare disease therapeutics, can actually be executed before the company's cash reserves are exhausted. The mFlusiva approval and mNEXSpike's meaningful market share gains offer encouraging near-term evidence, while the norovirus vaccine setback is a reminder that this transition will not be linear or uniformly successful across every program. The single most important long-term swing factor is likely the oncology pipeline, particularly the individualized neoantigen therapy program developed with Merck.
The August 19, 2026 announcement that InterPath-001 met both its primary and key secondary endpoints in melanoma is the clearest evidence yet that this platform can demonstrate durable, differentiated clinical benefit at scale, potentially representing a genuinely new growth category for Moderna beyond its original vaccine-focused identity. Combined with continued cost discipline and international manufacturing diversification, successfully converting this result into a regulatory filing and approval could see Moderna emerge from its post-pandemic revenue collapse as a smaller but more diversified and durable mRNA medicines company by the time its 2028 cash break-even target arrives.
Section 17. Bull Case. Bull Case Summary. Following mFluviceva's August 5, 2026 approval, the mFlu vaccine launches successfully ahead of the 2026-2027 season and gains meaningful uptake among adults 50+. Next spike continues gaining COVID vaccine market share. The positive August 19, 2026 Phase 3 InterPath-001 melanoma data holds up when full results are presented and translates into a successful regulatory filing and approval, validating the stock's dramatic re-rating rather than proving it overextended. Continued progress advances the broader oncology pipeline, including ongoing colon cancer trials expected to read out in 2027 and pancreatic cancer trials in 2031. The norovirus vaccine's additional cohort ultimately succeeds, delayed but not derailed. Continued cost discipline keeps Moderna on track for its 2028 cash break-even target without requiring additional dilutive capital raises, and new international manufacturing sites successfully diversify revenue while maintaining U.S. comparable margins. In this scenario, Moderna could successfully complete its transition from a single-product pandemic vaccine company into a diversified, multi-category mRNA medicines platform, with the market's post-August 19 enthusiasm proving justified rather than premature.
Section 18. Bear Case. Bear Case Summary. U.S. COVID vaccination rates decline further than management's own guidance already anticipates, pressuring Moderna's largest existing revenue source beyond current expectations. The full Inter-001 data, once presented, proves less compelling than the top-line interim results suggested, or the regulatory filing encounters delays, causing the stock's post-August 19 re-rating to reverse sharply, as its already demonstrated 20% plus single-day pullback capacity suggests is entirely possible. mFluviceva's commercial launch disappoints. The norovirus vaccine's additional cohort also fails to meet efficacy criteria. Continued adverse federal policy toward mRNA technology, following HHS's cancellation of Moderna's pandemic flu contract and BARDA mRNA research funding, further undermines government contract revenue and public confidence. Continued cash burn, compounded by the $950 million litigation settlement, forces the company to raise additional capital before reaching 2028 cash break-even, diluting existing shareholders at a potentially unfavorable valuation. And larger, better-resourced competitors continue out-executing Moderna in overlapping vaccine and oncology categories. In this scenario, mRNA shares could give back a substantial portion of the August 2026 rally as the market recalibrates around actual data and regulatory outcomes rather than interim headlines.
Section 19. Final Investment Conclusion. Moderna is navigating what may be the most difficult phase of any pandemic-era success story, proving that the technology, manufacturing infrastructure, and cash reserves built during an extraordinary global emergency can support a durable, diversified business once that emergency has passed. Q2 2026 results show genuine, if modest, progress, Revenue beat the company's own guidance, net losses narrowed, and cost discipline continued across every major expense category, while the FDA's August 5, 2026 approval of MFUL Visa and the August 19, 2026 positive Phase 3 melanoma data both offer concrete, near-dated evidence that the company's diversification strategy is beginning to produce real results, not just plans. At the same time, investors need to weigh this progress against the scale of what Moderna is still trying to overcome: revenue that has fallen 40% from 2024 to 2025 alone and more than 70% from its 2023 peak, continued quarterly net losses exceeding $750 million, a disappointing norovirus vaccine interim readout, and a $950 million litigation settlement that will meaningfully reduce the company's cash cushion in the very next reporting period. The company's explicit 2028 cash break-even target gives investors a clear timeline against which to measure progress, but reaching it depends on genuinely difficult, simultaneous execution across seasonal vaccines, oncology, and rare disease programs. The August 19, 2026 positive Phase 3 INTERPATH-001 result, the first ever positive Phase 3 readout for an individualized mRNA cancer therapy, is the clearest evidence yet that at least one leg of this diversification strategy is working, even as the norovirus setback demonstrates that success is never guaranteed across every program. Bottom line, Moderna offers investors a genuine, still unresolved turnaround story that just took a dramatic and volatile turn. A company with real cash, real technology, and a real diversification plan, whose stock has more than doubled since August 19, 2026, on interim, not yet fully published Phase 3 cancer data. That reaction, a 177% single-day spike followed by a 20% reversal and continued wide swings, shows a market still working out how much of Moderna's turnaround story is proven versus hoped for. This report does not constitute a recommendation to buy, sell, or hold mRNA shares. Readers should review the company's complete SEC filings and consult a qualified financial advisor before making any investment decision.